Good morning. All right. So Bitcoin ain't stopping. Got a red bar ignored, and how high will it go? As the markets appear to be ready for a little rest. Wow, is that all-time highs? Could that be? Those are the futures. Those are perking up to all-time highs there. Wow. What is driving that? Hmm, Interesting. Yeah, maybe it goes to 100K. That looks like it could be a blow off kind of a top. If it does shoot up there. Uh, wow. Okay. Where's this Erythium gapping up near 36 bucks? That's extended. All right. All right. Where is everything else? Which was clearly lower after last week's reversal. And so, as you know, the semiconductors last Friday, first thing mentioned here was the extended chart in the semiconductor index, SMHs. And I mean, last Friday was pretty interesting, and no one seemed to know why the market sold off. It seemed like institutions everywhere, traders all hit the sell button at the same time. And why was it interesting? Well, because it started off, um, maybe it's easier to go and look at SPY just to start off here. There was this what we call an end of day base. So when we look at the daily chart, you can see the cursor on the daily chart there, whether it's a bottoming tail bar, a green bar, whatever. Um, we look at how the intraday patterns formed. And sometimes, you got a green bar that closes near the high. And at the end of the day, it have been straight up, or it could have shot up in the morning and went sideways in the latter part of the day, and what we call an end of day base, which is really ideal for prices to continue to go higher when you have a bias that it would go higher based on a higher time frame. And that's what happened early in the morning. And so as we reached the 10 o'clock reversal period, it stalled. Okay, no big deal. It'll pull back maybe 50%, give or take, or some moving average, some fib line, who knows what, or minus support, which is what it did. It pulled back here. You can see the tail on the 15-minute chart. There was some stabilization on the 5. You can get back there. Right around here, tried to stabilize. Then it went down further to that major support. You can see the pivots on the 15-minute, and it jiggled around there, and then it failed, which was, what the hell happened? The selling began, and selling began more selling, and down it went until we got a little bounce. But so now we got a pretty big, decent sized red bar on the daily time frame. We've had red bars before that didn't follow through. This one directly didn't follow through. Then eventually it tested the low. This one didn't follow through at all. That one was minor, was a little follow through, and so on, as you can see. So S&P's got a relatively large, red bar. Hasn't violated the trend. I mean, even if it pulls back a bit more, it's not going to violate the trend. But you can see we've been talking about this. The weekly chart is extended, momentum stalled. It does look like a pretty good, eyeballing it size of what we call a measured move, igniting bar, a stall, continuation. There was a stall a couple of weeks ago, went higher. Now we got another stall. So how do we recognize a stall in momentum? Well, narrow range, right? Range narrows compared to what it was, small candle body. And I guess I don't know. I don't have to get my protractor out to measure the difference between the open and close, but I think that's close enough for sloppy government work to say that's a doji bar. Right? They're pretty close together, the open and close. So momentum stall came to a drastic stall. In other words, last week, things started out benign, dipped, went up, and came down and pretty much ended where it began the week. So if you look at this on a line chart, it's like up, pullback, up, little pullback, up, pullback, up, little dip. So obviously it's in an uptrend, no matter how you look at it. So now the question is Friday's reversal, what does it come down to? Well, we'll see. Does it violate this support area, which I've got marked as minor support because there's no pivots here, but breaking below this level would be a significant break of support in the short term. And down we've got the 20 MA there. We've got this congestion, and then got a big unfilled gap. So we'll see what happens from that point. SPX, where it was before I started here. Let me go back and see exactly where this is. It's coming off of the low here a little bit, gapping down on that bottoming tail bar. And so no bottoming tail bar on SPX compared to SPY, but it's about in this area. Yeah, close. And this was surprising too. Another thing that was a little surprising, that this didn't come down and fill the gap. Buyers stepped up. And other markets did. They came down into the gap fill, but this didn't come down and tag that unfilled gap. Buyers stepped up a little more aggressively there. But so, bull trend. We got to look at other markets. Can it back up there? But will it come down here? So anytime you look at a credit spread and you look at where you can get premium and where the strikes are, time to expiration, this is always 0 DTE. The simple thought is it reasonable to think that it won't go there today? Well, there's no meaningful economic numbers coming out today. Tomorrow's the big day and Thursday's the big day. So in my expectations, I don't think it would go down there today, because what is going to motivate sellers to be so aggressive in front of that number? The other side of the thought is, you always got to weigh pluses and minuses. What have traders been doing, institutions been doing ahead of numbers? Well, they've been mostly buying. The trend has been up. Maybe does this relate to going down in front of the numbers because of Friday's reversal? In other words, they have been taking the trend in that direction. In this case, the trend is up, but we got a potent reversal on Friday. They've been taking prices to the direction of the trend, in this case up, ahead of the numbers, and then you get the jiggling around. So the perception is there's risk on the numbers. Well, ahead of the numbers, game on. Let's see which way it's going to go. So we're kind of in the middle of these areas here, but I don't think it'll go down here. And you've got what I like to call lines of defense, the 20 MA, this support. It would be a relatively large move to get down to that strike. So I think the downside has got decent odds. Okay. Qs, that's where the damage was done. Semiconductors, big reversal, testing a pivot high, big reversal, got a red candle there, and potentially a breakout failure on the weekly chart. We got a whole week to go, but got a red bar. It's not breaking last week's low. You can see the cursor there. It's breaking under Friday's low, but not under last week's low. So at the end of the week, we're going to want to see two things. Does it break the low? Does it close below the low? Now, based on 3 weeks of going sideways, you can see the cursor on the daily chart. There's unfilled gap down here. There's major support. Whatever corrective price action is going to be, the assumption is, I could say, hey, we could say percentage-wise, let's just take it from here to here. Percentage-wise from Friday's close. 3%. And then from the high, give or take the high point, 5%. So in a bullish trend like this, most likely, of course, if it was to happen in a week, that's pretty big for a week and probably would be the extent of what we could possibly see. So keep that in mind as far as if things are moving lower and it looks kind of nasty, it's going to come to support, 5% correction within an uptrend. Buyers are going to be lurking down there. This is where the trouble was. Big reversal, giant gap up reversal, extended from the 20. Pointed that out last Friday. Maybe it could go higher. It did, just, a little bit of icing on the cake or to suck in a few more, which, risk is rising. And then it just fell apart. And of course, NVIDIA fell about 100 points from its high, 8% down on the day. It's extended. And, it's up a little. No, it's not. It's about flat. It was up a little bit earlier. So, look, after a big wide range day, most times you get a narrow range day. I mean, patterns like this, well, I shouldn't say you don't get them, 2 big down days, because there were other things like an institutional favorite, that went down 2 big down days in a row. This thing's been on a monster tear, since the end of last year, and now 2 big down days in a row toward an area of minor support. But that clearly, with a weekly chart, big reversal weekly chart, that is broken. MRVL was another one that, hey, markets blew it off in the morning. A gap down under a wide range green bar. And that was a pretty nasty gap. So we'll see what the semiconductors are going to be doing today. Let's go back here and see where are they at here. Gapping down a little bit. Yeah. Just looking at a few other ETFs holding up relatively well so far. IWM. This is the good stuff, right? Meaning it's grinding its way up. It's gapping down a little bit, but it broke out above these highs. We want to see that be, try and hold up. The transports have not. And we've got a smaller trading range within a bigger trading range. And the moving average is intersecting the middle of the smaller trading range. So while this is whippy and erratic, it's getting tight enough to where I think it's got to break one way or another. So you'll want to keep an eye on what the transports are doing. So how much tighter can it get? I mean, it's got to get moving here, I think. Maybe they've been waiting for crude oil because this has been all over the place. Broke out, came back in, not much down, a lot of uncertainty there. You want to set alerts up above here and down below. You can do USO. You don't have the futures, you don't have to. But that looks more like, a little buyable, sloppy setup there as this has started to move up. It'll be interesting to see what that does. Energy stocks have been improving. You can see the grind higher, even though oil has been jiggling around with that uncertainty. Clearly, institutions think this is going to go higher. There's some pretty good energy-looking stocks that are in bull markets. Mentioned those in the weekend letter. Others that look like they're just starting to get going, that look more like this. So this looks like it's going to continue to go up. Interest rates, another reason to think possibly, besides the big nasty red bar on Friday, the 10-year has pulled back to this unfilled gap. And it's stabilized on Friday. Not a big deal yet, but consider this is at support. If interest rates start to percolate up a little bit, that might be another thing that the market become uneasy about. They had this little move down, which was helpful. The dollar is sitting on this support. So if the 10-year and the dollar begin to move up, well, markets haven't liked that very much. They didn't really take too much advantage of the size of this going down. What really took advantage was the price of gold, which had a monster move up to new all-time highs. And that has been a long time coming. There was a lot of sideways, and now it's moved up. Now, the dollar has moved down before, and this didn't have this kind of big move. What's moving this thing? Uncertainty in the world, you know, the guy in front of the keyboard in Washington ready to press the nuke button. Russia, Russia, Russia. You heard the wacko on that State of the Union. So who knows? Maybe that's moved to gold. But that's viable on a pullback or consolidation, a continuation pattern. Keep an eye on that. So far, financials holding like a rock. That's encouraging. They're gapping down a little bit, but that's a plus. The Russell is a plus. Granted, these are extended, so any normal pullback, but still they're in a solid uptrend. The Russell improving is solid. The transports, maybe some rotation into transports would be good. If oil continues to weaken, that would be a plus. Another chart that looks like, well, we always look for charts to confirm what we hear, right? So early in the year, we heard, oh, they're going to lower interest rates. What was it? I don't know, May, March, whatever. And interest rates were pushing up. It's like, that just doesn't seem feasible based on what the charts are saying. Well, now we've got this little head and shoulders top here, which is more, and if this 13 week starts to break lower, that's why I got the green line here, an alert. If it starts to break lower, that would be more in alignment with now the anticipation that they're going to do it in June. So you can keep an eye on that. Another chart here that we've been reviewing in the Dow and in the advisory letter. Second time this thing closed under the 20 MA. So relative weakness, this certainly looks like it could test the 50 MA as if it starts to move lower here. I've been talking about the distance between the 50 and the 200 continuing to expand versus where it was when the move started, where the moving averages were converging. So as prices get extended, at some point they begin to correct, and we then look for price patterns that are supportive of what we're seeing. Extended can become more extended, right? And then break, second close. This one immediately reversed up again as it tested this pivot. This one, once it breaks last week's low, the next stop should be the 50 MA and this minor support. So set an alert here. And I think we pretty much looked at everything in a short amount of time. You get the idea about this week and what to be looking for. And yeah, that's it. All yours, Dan.
Good morning. Yeah, so Bitcoin's on fire
Barely
here.
hear you, Dan.
Let me turn the volume up. All right, is that better? Yeah, it's where it always is. Bitcoin's on the fire. It was interesting. I was watching the MicroStrategy guy on CNBC, and man, oh man, is he a evangelist for that thing. He was saying, he says, yeah, it might only have a notional value of $1 trillion right now as a currency, but he says it has a worth of 100 trillion. It's like, really? What school did you go to that you're going to just instantly magnify your market cap by 100-fold? Everyone has an opinion. It's in the greed phase right now. Greg talked about these, but another thing in the greed phase here. We were talking about this Friday. It could be a short-term exhaustion gap, but I'll bet that's the biggest bar in this stock's history. And then some guy from Cantor Fitzgerald gets on today, raising his guidance from 900 to 1200, and they showed an interesting summary of all the analysts' followers, upgrade, downgrade type of thing. 55 buy recommendation, 5 hold, and 0 sell. So everybody is on the same side of the equation. It'd be interesting actually to see what those numbers are and see how, what has changed on the buy sell recommendations on Apple and Tesla over the last couple of months. As some of these have weakened. That'd be interesting. Yeah, we don't have many earnings here. Couple things in the news, and it was harder finding quality setups this weekend, which is not unusual in light of what Greg reviewed the underlying markets with you. The OSG here, I like this if it takes out Friday's high. Looks like it's opening flat. And Elgin, I like this. I like this over Friday's high. This totally reminds me of our MT Live that we call the turn. So it is a buy setup. There's no question about that. It's a buy setup with a 4-bar turn on minor support. So now if we get a red bar ignored, which I see one print up here at 65. So that is a quality, gapper and trade. Have it in the bottom right here. I'll be watching that at the open. A G&E at earnings, bottoming pattern. I have an alarm at 1930. A Choice Hotel says they are calling off their attempted takeover of the White House. So, thanks, Alex. I didn't know that. Darn it. And as long as there's a good pattern and it's liquid, it's a big negative, but we've traded them, and I just give a disclaimer. All right, White House. So that's, they're not happy. It looks like that in the news might have leaked out, because there was some steady selling the last couple of weeks. But Choice Hotel looks like a short-term exhaustion gap, maybe. Let's watch 30-minute low for a call spread. Mealy here, got a favorable Barron's article, but it's far from the 20, but it's still bearish price action, gapping up here a little bit. Nothing to do. Yeah, Hilton and Marriott. Yeah, we got Marriott as a put spread idea, and I'm not adverse to it being a directional, but just with all this resistance and came to the market with a bearish bias based on our weekend research, which was confirmed here with the gap down. I'm going to be more selective on longs. AMPY, big gap up. That was in the news, I guess, last Friday, with some oil leakage or something or other. That's a big gap up in terms of negating that breakdown. But Lin is going to be put in an index. What a beautiful gap breakout right here. This was a big gap, but then it stabilized. So that would have been a fantastic entry right there. I would have been scared to do it here just because I would have said excessive gap, but it rested. Now that looks like a short-term exhaustion gap under 30-minute low. It's replacing Splunk, no pattern. Boeing we had in the weekend letters, both as a directional and a call spread. I guess some news came out saying they're in trouble again. Some more criminal probes. But that's a bearish consolidation. Now this was a Climo. There's nothing wrong with trading a Climo bounce, but the truth came out. Bearish price action there for 2 months. The weekly has room to fall. These are just some miscellaneous things I saw pre-market. Um, KRP, I think this was Sam your list. My alarm went off. Just a, this could be a 30-minute high. Microsoft having some more problems with people trying to hack them. And I wonder if that's why Crowd is down also. Crowd had earnings, had this big gap up last Wednesday, but got sold into. I remember saying though, um, how many years ago when cloud storage got popular, I think my initial cynical reaction was, oh, wonderful. Who's gonna guarantee the security of that? All your data floating around in the space. And now hackers are figuring it out. I know this is a Climo, not a very good one, because this is like steady selling. But it did have a nice gap up. I don't know, it's selling off now. All right, some MicroStrategy we mentioned, these stocks are on fire again. I just had Genie alarm go off. All right, so this was the earnings stock that I said bottoming pattern. I'll put that in a window of their computer. GNE. I had EXC alarm go off. Sam, looks like one of yours. EXC, that's a utility, but I like to break down failure. I like Friday's bottoming tail. Has room to the 200, gapping up, so that looks good. So that I like. PIK, this is what I call a toy. Look at this thing, went from a buck and change. So it was a toy the last 2 days, and now it's gapping way the heck over this. That is a monster toy. PIK. Costco got hit hard on earnings on Friday. We were going to do a call spread, but no. Hershey alarm. This could be a 30-minute high idea. Hershey. Nice gap, went sideways. Mondelez alarm. Now this, I love this turn after a new low, so it would be an ideal put spread, but there was no juice. And it's not bad for a swing. I just don't know how far it's going to go. But let me set a new alarm now, 7220. That could start off with a day trade. $72.20. IoT. IoT alarm, we gave this as a naked put. INVH alarm is housing. Greg, I was tempted to put this in the letter, but my only concerns were far from the 20 and the broader markets, but that's a nice flag pattern here. So keep an eye on INVH. Vacation alarm. We are in a half lot, so that's a low alarm. I'll just set a new alarm lower. This arm middle chart here, gap down, bearish pre-market. Arm I had as a day trade short idea. Mondelez up alarm again. That's not bad at all. I don't trade in the first 5 minutes, particularly on Mondays. EXC, Sam is doing well. this Legion earnings is doing well. Bio, though. Not going to rush into it. Maybe 30-minute high. TAN alarm just went off. We're long this in the ETF letter. QDEL alarm bottoming pattern. I think this is a Alex trade. EME is triggering as a short. This was actually in the letter. Well, not in the letter, but I've been watching this for short for almost a week. So
Meta might be good for a call spread, Dan.
all right.
Plenty of room for yesterday's high.
All right, so EME, WSM stopping out. We have for the naked 200 puts, so we still have a beautiful gain. Alaska Airlines alarm. That was a call spread idea. 200 puts, 90 cents on WSM, so we still have a beautiful gain. We closed half at 40. We made $1 on that put, that naked put. We'll take it. Yeah, Hershey looks good. Hershey and Mondelez. All right, ALK alarm. TAN, Mondelez, IoT. SIG, we have a put spread. Q's the weakest here. BGS up alarm. BGS, so that's triggering. And I had an NVIDIA call spread, but we're not going to get filled. JD long, that's bullish. Yeah, for a bounce. Void. All right, you mentioned Meta. 525. Can't believe, so many times I repeat the price of the stock and I just am mind boggling. Meta is $525. Great, $5 wide, only 27 cents. No juice. Ralph Lauren, low alarm, that's triggering short. Did everybody enjoy more daylight yesterday? I did. I wish they would leave it like that now, year round. Let me look, see, my alarm didn't go off on the dog, but I know I had it as a call screen. And yeah, I know we had it, or maybe I had it as both. Nice little purple. What do you mean? Hmm. Yep. Was 20 D-Dog. Oh, what happened to my alarm? All right, so yeah, we got to hold off on the direct.